Hello traders, this is Weiman from WeiManTrades, and today we are looking at another series in the Beginner Forex Series. This is another episode in the Beginner Forex Series, and today we are focusing on trendline trading. Okay, we're going to focus on trendline trading for beginners, right? If you've never traded before, you've never taken a trade, you're absolutely green about taking trades. Trendline strategy, this one specifically, is going to teach you how to take a trade, okay, using trend lines. And in this industry of forex trading, I believe for most traders out there, the trend line is one of the first things you are taught. And the reason I'm bringing it immediately after market structures, because the previous video, the previous episode in this series was something talking about market structures, the uptrend, the downtrend, and the sideways market. So we trade the uptrend, the downtrends using trend lines. Okay, trend line is a tool that you use to trade the uptrends and downtrends. So it's a tool that will help you get some trades. It just takes practice to pick the right trend line for a beginner that has never drawn a trend line before. Okay, it takes practice. Remember, you trade off the lows or the highs. Okay, so it would involve you marking these lows, right? And when you're trading trend lines, you need at least three you need at least three touches. No, I mean two. That's one. That's the first touch. And this being the second touch. Okay, then on your third touch you take the trade, right? So your first touch is this here, the second touch is here, the third touch you enter. So now usually when you're drawing this trend line, these first two are already there. You just mark the first two touches. You mark the first two. Then you wait for the third and see where a price ends. Okay? So today this lesson is going to be, we're going to be actually seeing rather than looking at slides. Okay? So here we are. And with trendline trading, the best time frame I recommend, the best time frame I usually recommend is H4. It's the H4 time frame. This is the one I recommend you trade the trend line on. Okay, so if you're going to do trend line trading, trade on H4 or H1. Reason being, for H4, yes, it might take a while, but the setups will eventually come. Even H1 works. You'll have more trades on H1 than H4, but H4 is, the trend lines are stronger. If you get a trend and you mark it, they are stronger compared to H1. So let's take a look at how you can trade the trend line. Now you see what I've drawn here. Let me redraw this for you guys. Zoom out a little. So let me remove that. Now let's have a look at this. Okay, so when you're doing trend lines, you'll have to try. Remember, you already see the market is moving upwards. Okay, you can already see from, how do you see? Look at this. generally the market is going upwards. So you need to find your trend line. You need to find your trend line. So you test, get your trend line tool, mark a low, take it to the next low. Okay? And drag here. So if we mark, remember we're now using this low and this low, these two, this one and this one. So I've marked it and pulled it there. What I told you guys earlier on was first touch. This is our first touch. Second touch, the third touch, you take your trade. And as you can see, on the third touch, the market bought. This type of a trend line is for buying. The market is generally going up, so you draw it down to get the next retracement point where you can buy from. Okay? And now there are certain conditions for the trend line, for the trend line trade to be valid. Okay? What are these conditions? Let me draw them for you. Condition number one. If, for example, this is our trend line, we have that, we have that, we have that. Now the market is coming back to the trend line, okay? What you will notice, let me draw the trend line. This. Condition number one is that the next high, okay, the next high has to take out the previous high. What do I mean by that? You see this? This is the previous high. This next high took out this previous high. You can look here. This low made this high, and this low made this high, which took out this high. And even when we're coming back down here, okay, now of course this alone is a valid trade, it's a valid setup. When you come back down here, you target the next high, you enter your trade and you exit from here. Good clean pips. That is condition number one. Okay, condition number one. Now for me, when I'm trading trend lines, I have two conditions. There is this, and then condition number two is that when the markets finally reach here, if you're trading H4, your control time frame is M30. Okay, your control time frame is M30. Now when the markets reach the trend line, what do? You don't just pump in your what? Your trades. You don't. You need a breakout on M30. Okay? You don't just pour in your trades. No. You need a breakout on M30 before you enter. So let me explain what I mean. For you people that have been following these terms like breakout, I've talked about them so many times. So it shouldn't be something very new to you. Now, look here for our last condition. You see the market, we have the market coming down, yes, touches the trend line, and then it starts moving like this. Okay, then it goes up and then starts buying. But where would I enter my trade? Me as Weiman. So since the market touched here, the next level I'll be looking for to break out is this one, because this is the next gap. And when it broke from here, you see this small retracement, I would enter my trades from here, and then the buys go. After this breakout, I'll look for a small retracement and take my entries. Now If you also the high risk type, the other thing you can do is it comes down, it touches, watch how the market behaves. As you can see, even the M30 candlestick closed above did. It closed above. Now, if you don't understand the breakout theory, the easiest way to trade it, if there is your trend line, the market comes, touches it, and closes above it, wait for the next candlestick that opens. Let that candlestick come back to the moment it touches the trend line. You layer your trades. By layering, I mean start with the smallest lot size, increase downwards. As the market pushes downwards, you put in your entries, and then stop loss of 20 pips, 20 to 30 pips, and target the next high on that on the trend line time frame. If it's H4, you target the next H4 high. So these are the conditions. Now, as you can see here, we have the first candlestick touched, closed up, then the second one. On its touch, put in your buys and you hold your trades. So that's how you trade a trend line for buys. That's how you do buying trades on a trend line. The next thing for sellers, it's the opposite. Okay, let's say you have the market moving like this: first touch, second touch, your third touch, right? First, second, third. Apply the same rules. Just apply the same rules and take your trades. But remember, there has to be these. So these laws have to be taken out. They have to be broken, not just taken out, broken. And then you consider it a valid trade. So on our next lesson, we are going to see what do you do if a trend line breaks, for example, on your third touch. You're busy waiting for a trade here and a strong candlestick breaks your trend line. We shall be looking at that in the next video. So stay tuned and see you guys soon.